So Tesla just dropped its latest earnings report, and on the surface, Wall Street saw one thing. But if you dig just a little deeper, wow. This wasn't just a financial update. It was basically a declaration of war on its own history.
All right, let's get into it. We'll start with those top-line numbers, the ones that got everyone on Wall Street talking. And, at first glance, things looked pretty good.
First up, earnings per share. They came in at 50 cents. Now, Wall Street was only expecting 45 cents, so that's a nice beat, right? A pleasant surprise for investors, for sure.
Then you have revenue. That also came in strong, hitting $24.9 billion for the quarter, which, again, just squeaked past what everyone was predicting. So everything's looking great, right? Check, check.
And this next one, this is a really big deal. Their gross margin hit 20.1%. Now, that's the highest it's been in 2 whole years. What that tells you is that they're getting way more efficient at actually building their stuff. And for profitability, that's a massive green flag.
So you put all this good news together, and yeah, the stock got a nice little bump. It really looks like the whole Tesla machine is just humming along perfectly, right? Well, this is exactly where the story takes a massive plot twist.
Because as soon as you peel back that shiny top layer of the report, it's like opening a door to a totally different room. And what's inside is a completely different picture of Tesla's main business, selling cars.
This is a big one. For the first time ever, their big Chinese competitor, BYD, officially sold more pure electric vehicles than Tesla did for the entire year. We're talking 2.26 million cars. BYD just snatched the crown of the world's largest EV maker, a title that Tesla has owned for a long time.
And this table just lays the hidden problem out perfectly. Look at their other businesses. Energy, services, they're growing like crazy. Up 25 and 18%. But then you look at their main gig, automotive revenue, and it actually fell a lot, down 11% from this time last year. That's a huge deal.
So here's the paradox, right? They're making more money on each car they sell, which is great, but they're selling fewer cars overall. Deliveries were down 16%. And that crack in their armor, that problem in their main business, is what pushed them to make a decision that, honestly, is pretty shocking.
So, what do? They're killing them. Tesla is officially discontinuing their flagship, iconic cars, the Model S and the Model X. These are the cars that started the entire revolution for them. And now, they're just gone. And you have to understand, this wasn't just about numbers on a spreadsheet. It was a massive symbolic move. Think about it. The company that basically created the luxury EV market is now telling the whole world that its future lies somewhere else entirely. So why would they do this? Why kill off these famous cars? Well, it's because they need the space. They are literally tearing out the old production lines and converting that factory space to build their humanoid robot Optimus. They are sacrificing their own history to go all in on this wild, radical vision for the future. And this whole massive pivot, this entire bet, it's all built around one central idea that Tesla is calling physical AI. The takeaway here is they don't see themselves as just a car company anymore. No, they see themselves as a company that brings artificial intelligence into the real physical world. And this vision, it's built on 3 main pillars.
Okay, pillar number 1, the Robotaxi network. And this isn't some far-off dream. They've already started driverless tests, like no safety driver down in Austin, Texas. And they're planning to start building a special purpose-built vehicle, they're calling it the Cybercab, as soon as April of 2026.
Pillar number 2 is the Optimus robot. And again, we're not talking about some lab experiment here. They are actively setting up production lines. Their goal is to eventually build 1 million humanoid robots every single year. The idea is they'll do everything from factory work to, maybe even chores around your house.
And then there's the third pillar, which is basically the foundation that makes all of this other stuff possible. This is the whole ecosystem, their full self-driving software, the absolutely enormous AI supercomputers you need to train these things, and even the energy storage, like their megapacks, because a world full of AI data centers and robots is going to need a ton of power.
So let's be super clear. This is not some little side project or an R&D experiment. Tesla is betting the entire farm on this pivot. And when you see the numbers they're throwing at it, it's just staggering.
Get this. They announced they're going to spend over $20 billion on this stuff in 2026 alone. To give you some context, that's more than double what they spent the year before. Just a mind-boggling amount of money.
And that money is not going towards building more car factories. Nope. It's for building an entirely new supply chain, from the ground up for this AI future.
We're talking their own lithium refineries, their own battery production, designing their own advanced AI chips, and they're even planning to build a giant factory, a terafab, to make the chips themselves. Why? Because they basically think no one else on the planet can make them at the scale they're going to need.
You know, Tesla's own CFO said it best on the earnings call. He said, "We are not opening the next chapter, but a whole new book." They're not just turning a page here, they're starting a completely different story for the company. And they believe that new story is starting right now.
So what this all really boils down to is that while cars are what Tesla sells today, it's not what Tesla is tomorrow. Not in their eyes. They're trying to shed their skin to become something completely new. Which leaves us with a really fascinating final question. If this massive, crazy bet actually pays off, what do we even call them then?